effectively bring out. So, like I said, thank you for joining. Thank you for coming. And yeah, it should be a good one. Today we're going to cover fundamental analysis and how it works. And it's one of the things that I have done
The broadcast is now starting. All attendees
before,
are in listen-only mode.
and it's something that a lot of clients have asked me to do again and again and again. So hopefully this will be effectively the final summation. Some of the content that I will cover today, I would have gone through before, but again, it's because we have a number of new faces because of the campaign that we're running at the moment. So it's just gonna go through that content again. It shouldn't take too long. I'm hoping this will take the best part of 45 minutes, an hour at the very most. And again, like I said, thank you for joining us on this lunchtime special. So as always, before we do start, I'll go through the risk warning, which will just detail effectively all financial products traded on margin carry a high degree of risk to your capital. They are not suited to all investors and you can lose more than your initial deposit. Please ensure that you fully understand the risks involved and seek independent advice if necessary. See our full risk warning in terms of business for further details. We do this at the beginning of every webinar just to make sure that we're very clear on what's going on. Going through this webinar, a lot of the content and material I've drawn up myself, so please don't use what I'm telling you as advice or as the gospel. I know a few clients do follow me, and everything that I express is the opinion of my own, not the opinion of GKFX. So I just want to make that clear from the very beginning so that we don't have any confusion or clients trading on what they feel is advice. All right, so going into detail as to what's happening today, we're going to look at fundamentals and fundamental analysis. The title of this webinar is Fundamental Analysis and a Step-by-Step Guide as to how it works and, what it means to myself, what it means to traders that I work with, the company here, and, how you can use it to effectively bolster and boost your trading. There are two sides to trades or trading. Some of you may know. I've done it before. I've covered both sides. I've covered the technical aspect, which is concerned with looking at chart patterns, prices, looking at indicators, and then there are fundamentals, which is more tailored to news. So if you're a client that you pay attention to what's going on in your macroeconomic environment, then this is perfect for yourself. And speaking for myself, I use a blend of both technicals and fundamentals with my trading, and what I've seen works, because you there are certain aspects of fundamentals that technicals can never ever understand, and vice versa. And I think with trading, you need to have a good appreciation of both sides of what effectively is fundamentals and is technicals. You'll find clients are a mixture of both. Some may use one more than the other, which is all right. But effectively, how it works is, you can by all means use some of the information that I will be covering today to better your trading. So going deeper into what I'm about to sort of show you guys, effectively I've got slides. Some of it will be practical. I'll sort of paraphrase off the slides. All of this information can be taken or sent to yourselves if required. There is a lot of content that I am going to go through, and I do know many clients will have questions about what's going on, how what I'm doing. I tend to answer the questions at the end of the webinar just to make it slightly easier for myself, because a few questions that may be asked I may cover during the course. So if you do have questions, by all means leave them in the question box, and I just be rest assured I have seen them and I will answer them as and when I go through the webinar. And just a quick one, before we start, I think this question is relevant from Mr. Jane. He's asked, is buy side or sell side equity research equivalent to fundamental analysis? Certain aspects, yes. When you're looking at news that pertains to a specific equity, then anything that surrounds news is fundamental. But in this webinar, I'm going to go specifically on things like your economic calendar, specific market events that will that dictate where the market is going. So yes, your research could be seen as fundamentals, but there are different elements or aspects to fundamentals as well, which, like I said, I will cover. So, in a nutshell, fundamental analysis attempts to predict the intrinsic value of an investment. The methodology is based on the theory that the market price of an asset is typically tending to gravitate towards its real value or the intrinsic value. So basically what that's saying is that news and events that come out will effectively dictate the price of the market or could manipulate or move the markets. And I'll go into specific news events, specific events as a whole that actually do affect the markets. And we will see that it's not only technicals that direct or show where the market is going. The next few slides, I'll go through specific things. So things like your interest rates announcements, gross domestic products, so your GDP and inflation are all factors that are wrapped around fundamentals. So these are news that countries will have, certain economies will have. Interest rates is huge. It's a big topic at the moment for all the major markets because we're going into a time, about 10 years on from the crash that happened, where interest rates or the manipulation of interest rates was used to effectively steady the ship, steady all the global economies. And now we're moving into a time where economies are relatively stable and there's going to be changes to interest rates. Interest rates is concerned with effectively how the central banks will manipulate spending within an economy. And I'll go deeper into some of these figures and some of the central banks. But interest rates announcement. So if you find any news or anything that's relevant to interest rates, by all means look at that. And I'll go into detail again as to how that can affect your trading. GDP is a measure of the country's economy, and it represents the total market value of all the goods and services provided or produced in this economy. GDP figures will come out as well for specific countries. Again, it's a specific fundamentals that I would suggest that clients should look at. GDP figures is a good indicator as to how well or how strong an economy is, and you'll get relative GDP figures coming out on a frequent basis. So again, building up your fundamental profile, I'm trying to give you nuggets of information that if you see certain words that you start looking at and say, okay, this could be effectively used for my trading. Inflation, so that's the general level of prices for goods and services, looking at them rising and falling. So inflation, deflation, those are again key figures. Again, it shows the strength of an economy. Looking at inflation in the UK, it's risen. I'll go deeper into this as we talk about key figures that speak about inflation within our company, within our country. But looking at inflation, it generally just shows how strong the purchasing power is within an economy. So if you're looking at interest rates, GDP, inflation, by all means, these will affect the markets that you're looking to trade. Going deeper, we have what we call CPI. Again, another key barometer of fundamentals. Your CPI is what we call the Consumer Price Index. Again, these are figures that you'll see on your economic calendars that will be released every now and again. And it will show again is a crucial. This ties in with inflation, and it represents the changes in the level of retail prices for the basic consumer. So, it shows how much clients are actually willing to spend within an economy. Going again into the next one, employment indicators. We have non-farm payrolls at the first Friday of every month. So this is a huge indicator for employment. So it shows how many people are working within the America, or how many jobs were added in the previous month for America. Unemployment figures, again, important to show the strength of an economy. If there's a low rate of unemployment, then that typically means that the economy is doing all right and steady, and there's growth. Retail sales, again, retail sales shows how much these companies are actually making in terms of purchases. Again, it's a key barometer to show economic strength. And these are all the things that I say, wraps around fundamentals. It wraps around, you basing your trades off of the news that are coming out within the market. And just a quick side note, a client has asked a question. I would like to know on companies' fundamentals also, and its related ratios like PG ratio. Yeah, so in terms of company fundamentals, if you're looking for things that are specific or relating to companies, there's outlets that you can use. We have something that we call, Trading Central or Recognia, which I can go through later on at the end of the webinar, which will show you, specific things like earnings within a market. So that shows how much a company has added in the last few months, quarter, the strength of a company. If you're looking to look at shares specifically, although we're a broker that look at all the instruments, so you can trade all the instruments with GKFX. We do have shares, so we have information that will be relevant to shares. So I'll send that to you, Amit. So I've gone through some of the key things that wrap around fundamentals, your CPI, inflation, interest rates. But you want to know, where can I get this information, or what places will be good points of resources. And like I said, this might be familiar to some of you. I've spoken about this, and I'm going to go through economic calendars again because I feel that it's definitely important for clients to understand the importance of your economic calendar. Your economic calendar is where you can effectively map out your week, your day of trading. So you can go here for relevant information that will show effectively what's coming out, when it's coming out, which markets it's going to affect, how it will affect them, and effectively you can really pinpoint key areas that you would like to trade. Okay. So many traders, and I'll just quickly read out this insert, many traders overlook the importance of the economic calendar. As they are caught up staring at their charts for days on end. The economic calendar is a useful tool which highlights key moments within global economic climates and can be used as a marker for many things. So I've got three main pointers that I want to, reiterate to clients that it is very important to have in the back of your mind when it comes to just economic calendars. When you are looking at the economic calendars, there are a lot of numbers, figures, information that's on there, some more relevant than the other. So it's important to really whittle out and understand what is going to be used for yourselves. So the first one that I have is understanding of what the actual figures mean is important. Oftentimes information which is better than expected will affect the market positively and vice versa. So what I mean by that is that, say for example, we're looking at non-farm payrolls, which again is a huge resource, a huge bit of information that comes out first Friday of every month. If the figure is better than what the previous month was or the forecast month is, it can often have a good effect on the market. So if you know that you're trading in that period of time, you need to know what the figures actually mean when they come out. Say for example the figures is below expected, you can feel that if you're in any positions that will be affected by this bit of news, then it might not go in your favor if you're on the buy side, and vice versa. So an understanding of what the actual figures mean is extremely important. Next point that I feel that clients somewhat overlook is being holistic. Many clients tend to focus on just one area when looking at fundamentals, often missing opportunities or being blindsided when news come out. And what I mean by this is when you're looking at information and looking at charts, and when you're just trading as a whole, sometimes you get bogged down with looking at one thing a lot. So whether it be your charts, whether it be even news resources or outlets, sometimes if you don't have an appreciation of what's going on in the macro section, then you won't be able to effectively trade, because there can be information that will come out and effectively wipe out everything that you've done, which will leave you in a very bad situation. So being holistic, having an appreciation of what's going on globally in the macroeconomic sphere, is extremely important. Just a quick one for Mr. Bennett, who's asked, will the upload of this webinar go to GoToWebinar? All of our webinars will go onto our YouTube page. So if there's any content that you've missed, any material that you would like, everything gets uploaded by in a week's time, basically. So you can have all of this to your disposal and go back and watch and rewatch. Okay. Mr. Jane, I'll go back to that question about inflation because I got a few tidbits at the end that's going into inflation. And Mr. Bennett, I'll send the YouTube links again at the end. But if you just type in GKFX UK, you'll find all the webinars saved there. So just a quick one. What I'll do is I'll open up a few of the links for the economic calendar, so you can actually have a look and see what I'm talking about, okay? So you can actually go to an economic calendar right off the GKFX page, because we know how important it is for clients to experience what it means to look at fundamentals and getting their fundamentals right to them. We actually derive all of our information from a website called investing.com, where some of you may have actually come from. I know that that's where I get my information from if I'm not using GKFX's own. But this is how a typical economic calendar looks, even if you're not using ours or the one from investing.com. And effectively what it does is it will give you times, it will give you dates, it will give you specific areas and where information is coming from. And I'll just start from left to right, okay? So I'll just look at today in terms of information that's coming out today. And I'll make the time frame my time frame, which is GMT +1. There we go. So this will show me the times in which the data is going to come out, which currencies will be affected. Again, being holistic, just because that says USD, there might be, depending on what is said or what figures are coming out, it could affect different markets. So again, don't use that as the gospel. That's probably going to be the primary pairs or the primary currencies that will be affected. But then again, this could have an impact across the global markets. We then have the impact. So the impact is always probably in threes. So we'll have the one impact being something that's going to predict not as much volatility as we would like. 2 is moderate volatility, and 3 is high volatility expected. So we can already see that today. Mark Carney's going to speak. Mark Carney's actually spoke, who's the head of the bank or the governor of the Bank of England. That has high impact. That means it's going to affect the markets a great deal. So again, this is where I would go to on just before I start trading, or throughout the day. I'll have this open and it'll just show me, okay, in 39 minutes, then we're going to have some news or some information that's going to come out on German CPI. So I might want to have some trades effectively in that time. Quick question, Stella. Yep. So all the slides are accessible. Again, I can send all of that information to you as and when you want. Just drop me your email or your information. Just email your relationship manager if you do have one, and we can then send that to you. Going back to the slides, I'll take you to investing.com. So like I said, investing.com is one of my favorite websites. I use this a lot. It's very informative, and you can have, and like I said, some of you guys have already come from there. And this is how investing.com works. So it's very similar. I'm taking myself to the UK site. In this area here, you have economic calendar. There you go. It's very similar. So if you like this layout, it's a little bit more maneuverable. Again, it works on exactly the same format. It shows when information is coming out, who's saying it, what the actual data that came out is in terms of percentages or in terms of figures, what the forecast was, and what the previous was. Again, you can use this and base this around your trading strategies. So if you know that the forecast is slightly higher than what was the previous amount, but then we then had actual data that came up below, then again that will skew or give you an indication as to how your trades can go. This is why the economic calendar is important, and something, like I said, that I've incorporated. Whether I'm a technical or a fundamentalist, I use this every day, because it gives me relevant information to the markets. Going back to my slides, just give me a moment. The next thing that I'm going to talk about, is now that we know that we have our economic calendar uh, at our disposal, what else is important when looking at fundamentals? What else do I do, or what else do traders in GKFX do when they look at news and data that is actually coming from the calendar itself? And the biggest one that I've mentioned, or that I'd like to mention, is understanding relationships. Equity markets are currently rallying whilst gold is consolidating. Historically speaking, many traders have used gold as a safe haven when market conditions are hairy. For the last 6 to 18 months, we have seen higher highs in the major indices. So when I talk about relationships, before, we used to see a lot of you that might have been trading or have traded before would have realized that when situations weren't so good with the equity markets, that means your DAX, the Dow Jones, the FTSE, a lot of people saw gold as a safe haven. It's a valuable assets. It's effectively where you can, if you invest in gold, you know that you're going to have added value. So what we used to see was when indices were falling, we'd see an increase in the price of gold because more people are buying gold. So that's what I mean by understanding what relationships are. There are other things in the market that will also have a relationship. If one goes up, the other goes down. And just a quick one for Mr. Jane. When I say hairy, that means the markets are in a position that they're not doing so well. So when market conditions are maybe unstable, um, when there's a lot of volatility, when clients aren't sure where to go, then they start running to safe haven assets. So one of them was being gold. But for what some of you may have realized is that gold is actually consolidating. So for the last few months or the last year and a bit, we've seen that gold is actually just moving sideways. And why is that? A lot of people have seen, why is there not much movement or much range when trading gold? And the reason as to that is because fundamentals are driving the markets one way for the equity markets, and most of the indices are rallying. So what I'm going to do is I'm going to bring up my MT4 platform so I can actually show you what I'm talking about. And Stella, in regards to the webinar, just stay at the end of this webinar and I'll definitely send you those slides. So what I have here are 4 charts, okay? Three of which are the major indices in the world. So we have the DAX, which is the German index. Then we have the Wall Street, which is the American index. And we then have the UK 100 or the FTSE. What I've seen, and in the top left hand, we got gold, okay? So we can see, I've changed all of them to monthly in terms of the bar. So each bar represents 1 month, okay? So this is a very, very long-term outlook on what's happening with the markets. So if I look at gold for the last few months, you can see that, there's been a little range. It's been trading up and down and it's been moving sideways as opposed to the big movements or the big, bullish movements that we've seen on all the other major indices. If we go back to, let's say, the Wall Street and look at when there's been a real kickoff, I'm pretty sure we'll see from June 2008, 2009, this is crash. All of this V down was a crash, and we've just had upwards momentum since then. If I zoom in specifically, we've seen upwards momentum towards the end of last year, mainly because of Trump. So in this area right here, November was when Trump was instated, and we can see that we've just had a gradual rise since then. And that means a lot of clients are actually pulling their cash out of gold and moving it into the equity markets because we're just finding out that there's going to be higher highs. Everyone's looking at the equity market saying what's going on. Everything's rallying. Um, and this because of this, people are pulling out money from safe haven assets like your golds and investing in the equity market. So oftentimes people are finding that this is a good time or good opportunity to do so. And is Bitcoin taking the place of gold? Who knows? Bitcoin is a new asset. In terms of fundamentals, you tend to find that when something is new in the market, you'll have a lot of wind behind it. So because it's unknown, a lot of people want to trade it. Is it replacing gold? I doubt it, because you can't take away the physical natural resource of gold. Bitcoin is still very virtual. You can't. Although there's areas that you can actually use Bitcoin to buy things, it won't hold at the moment the same value as something is tangible like gold. But Bitcoin market is growing. We're Cheeky FX is actually going to place from the 9th of October Bitcoin on our platform, so clients will now be able to trade Bitcoin because it has really, really taken up a lot of interest with traders. But as far as it being a replacement or taking the place, I don't see that happening. And just going back to the webinar, relationships is very important. We have other things that we see as safe haven assets. Dollar yen is often seen as a currency pair where if things aren't going so well in equity markets or other markets, people will start holding off and start trading dollar yen. So again, start understanding relationships so that you can start trading fundamentally better. So going on to the next phase or next part of the webinar, actually understanding the events that are going on, because there are a lot of events that take place, and they can happen anytime. They can happen frequently. They can happen once in a blue moon, which I've gone through again. So what I've done is I've noted some of the events that I feel that, if you have a pen and paper, or when I do send people the webinars, that they should really take hold of or look at and experience, because these are good opportunities to trade. The news that come out from these specific events often affect the markets. Okay, so I got non-farm payrolls, which I've already mentioned a couple of times already in this webinar. Non-farm payrolls, again, going back to it, is the previous month's jobs added in the American economy. It's a good barometer or good indicators, strength within. The more jobs added means the better the economy is doing, the more people can be offered jobs, less people in unemployment. So we like that. And at the very same time as non-farm payrolls, which comes out the first Friday of every month at 1:30 p.m. GMT, you have average hourly earnings. So we'll see what the average hourly earnings within. So say, for example, it's $10. That's the average, which I know is very high. If it's increased or decreased within that month, then we know that there's been an improvement somewhere. That means companies are able to pay their employees a lot more. So these pieces of information will have an effect. When it comes out at that 1:30 on a Friday, you'll see that there will be movements in the market. Inventories for oil from the EIA, Energy Information Administration, that comes out every Wednesday without fail. So this shows how much crude has been added to or how much barrels of oil, has been added to the global economy. And so sometimes we'll have 2.3 million have been added. We'll have 1 million. The more oil on the market means the less oil is going to fall in price, because there's more, and vice versa. What's happening in Saudi Arabia when they're talking about stemming supply. What does that mean for the oil market? If fracking, new resources are found, what does that happen? What does that mean for oil? Again, every Wednesday, this information is there for you to effectively trade off. I've already gone through RPI, CPI figures, so that's retail price index, and consumer price index. Those figures will come out every now and again for a country, sorry, and effectively give you information as to how strong that economy is. And if it's strong, then you know that maybe there's good opportunities to trade there. Retail sales, inflation figures, and interest rate decisions. Again, these are all things that, for example, the whole of last week we had key events happening on almost a daily basis where the central bankers or the heads of the central banks were speaking about effectively what was going to happen in regards to interest rates and inflation. Um, Gave clients opportunities to trade. We saw cable GBP USD is soaring above the 1.3 handle. That was basically because of both technicals and fundamentals. 1.3 was the resistance point for some time, and a little bit of news that came out last week was able to help push that, where there was a bit of uncertainty with the dollar, and that allowed the pound to gain some ground on there, and now we're trading at around 1.33. Hopefully we can push on and get a bit more strength with the pound. We want more strength. And this ties it nextly with the next part. Who are the people? And again, this is a slide that I've used before, but I'm using it again because I feel that it's extremely important to know these figures that are in the global economy, that movers and shakers, people that whatever they say can affect and will affect markets. Those are these four individuals, these four lovely individuals. Some of you may know them, some of you may not know them. I feel that these four individuals are effectively one of the four most important people when it comes to economics and just global news, because what they say, what they do, the decisions they make will effectively dictate how the markets will go and how the global economy will work. Okay. In the top left-hand corner, we have Chair Janet Yellen, who is the head of the Federal Reserve of America. A very interesting character, loved by some, hated by many. Very interesting position that she's in, because Donald Trump, the president of the United States, had come out and criticized her heavily, said that she's not really capable of the position that she's currently holds. And January 2018 is going to be the decision as to whether or not she will remain the head of the Federal Reserve. What's interesting is that over the last few weeks, few months, as to be fair, she's been alluding to the fact that there's going to be changes. Okay, those changes were in line with what President Trump has mentioned in terms of his manifesto, and also just improving the economy. Like I said, we've come to a state within this global economy where we're rallying, we're at all-time highs. The economy seems to be doing very well. So the measures that were taken post the crash of 2008, 2009, which the Bank of England, the Bank of Japan, and the Federal Reserve of America, they took the same procedures. They hiked interest rates. The interest rates were at all-time highs, stopped people from saving, wanted people to stimulate spending within the economy. Well, now we're looking to roll that back in America anyway, and Janet Yellen has said that she's going to start unwinding some of the stimulus that they had put in to improve the economy and make the economy as it is right now. So they've got an impetus on tapering now, and the economy is growing steadily. Job growth is going well, from what I can understand, and unemployment is getting lower. So what's now happening is that Janet Yellen, who's looking of Donald Trump has criticized, has looked to steady the ship. The American economy is doing relatively okay. So, are you going to change the status quo? Are you going to remove the figure that has now steadied the ship? Who knows? So it's going to be a very, very interesting decision, or interesting end to the year with Janet Yellen. And again, these four people that I have on screen are probably the most important when it comes to global decisions, economies, and central banking decisions. On the right of her, we have Mr. Mark Carney, who's the governor of the Bank of England. A very interesting figure also. He's had his adorers, and now people aren't really on the side of him purely because of the mess that the UK is in. And I will say a mess because I live and breathe in the UK. I understand our economy and what's going on at the moment. And he's been tasked with maybe not this idiosyncrasies of um, the Brexit negotiation, but he's definitely been tasked with, trying to steady the ship financially with the with using the Bank of England and also, taking us through Brexit. Right now, inflation is relatively high in the UK. Wages aren't as high, so we have a disparity. We have a wage gap. So what we're seeing is the price of goods are going slightly higher, whereas the amount people are earning or wage rate isn't growing. So people are having difficulties with buying products now. So when we're now having that as an issue, and he actually spoke today, and this is what I'm saying, fundamentals is very important. Mark Carney actually spoke today. Today was the 20th anniversary of independence of the Bank of England, and he was just talking about, some of the elements that surround the Brexit negotiation, and he said that the Bank of England is not omnipotent, so they're not all powerful, and they can't be expected to solve every economic problem in the UK because I feel that he feels that he's being pressured at the moment to fix everything that is wrong within our setup here in the UK. And this is why I said it's very important to listen out to some of the signals that these individuals are saying because what they say will affect us long term, especially when it comes to decision making. Um, and when we're looking at productivity, he says what the Bank of England has done so far is good enough. Um, what might lend is a quick fix, not going to boost long-term productivity, but we'll see how it goes. So he's asking for the economy to just bear with him at the moment. Just a quick question: how is Forex fundamentals different from commodities fundamentals? What should one be looking at when working with commodity fundamentals? It depends what commodity you're looking at. If we're looking at commodity fundamentals, you're really looking at supply and demand. So, it's very straightforward when we're looking at commodities. The less, let's just take oil for example, the less oil that there is on the market, the higher the price of oil is going to be, and vice versa. So when you're looking at commodities, you're really looking at, is there a surplus? Is there too much of a specific commodity on the market? Who is, for example, Saudi Arabia are taking they take a lot of commodities when it comes to oil. What are they saying? What are the signals being released from Saudi Arabia when it comes to their outputs? So that's what you're really looking at when you're looking at commodity supply and demand. When you're looking at Forex fundamentals, you're looking more at interest rates and inflationary signals. So the four people that I have in front of me are more tailored to your Forex and your indices because what they will do is they'll show, okay, for example, if interest rates are going to fall, then that means that they want people to effectively stop spending. So effectively, that means that there's going to be more cash or more cash in the market. That's why we're looking at Forex. We're looking at central bankers when they're talking really to look at the Forex fundamentals. Going back into the four people on screen, we have in the bottom left-hand corner Mario Draghi, who's the head of the European Central Bank. The European Central Bank also have a big task, with England looking to leave, or their impending departure of the European Union. Certain countries like Greece that are holding on the curtails of the European Union, dragging them down with their massive debt. Issues with Spain. A lot of people look at Mario Draghi saying that he's being led like Angela Merkel, who's just been re-elected in Germany as Chancellor for Finance. You know, he has to navigate so many different pots. So many different countries are now involved with the European Union. Who's waiting. He has to manage who's waiting, who has to take more of the flack of the European Union. Part of the reason why Britain decided to leave because they didn't want to effectively take that mantle. So anything that's euro denominated, often when Mario Draghi speaks, he will affect the market. And in the bottom right hand corner, we have Kuroda. who is the governor for the Bank of Japan. And again, a very interesting figure. Why he's interesting is that he doesn't really see eye to eye with the prime. Shinzo Abe. Shinzo Abe just recently said that he was going to dissolve a part of parliament without even telling Shinzo Abe. But he's had a good hold of Japanese economy. They done what we call QE, which is quantitative easing, where they pumped cash into the economy so that would stimulate growth. And he's saying he came out with a statement just this morning, saying expansion has been well balanced and broadening, but growth remains weak. So expansion, when they say expansion, is general expansion within their sectors in the industries, but in terms of growth itself, because they've been pumping out so much money, growth has been slightly stifled. Um, but he expects inflation to accelerate. They're pushing for inflation at the moment. What we have is what they want. So they expect inflation to accelerate towards their target, and there's no sign that their quantitative easing on their monetary policy that they've got in terms of pumping cash into the markets is going to stop. Um, so just going back to as an overview, these are the four main central bankers that effectively move and shape the markets. You want to understand what these guys are saying, when they are saying it, how important it is. Is very, very crucial to your trades. If you have any positions open and these guys are speaking, you might want to be cautious. You don't want to be in a position where a hawkish or a very aggressive statement is made by any of these guys and it then affects the market. And just going back to a question, the announcements from the central bank chiefs, can we take them as long-term or short-term sentiment? Very, very good question. What you'll find with central bankers is that they're very, very cautious with the terminology that they use or how they describe things to the market, because they know themselves that whatever they say will effectively move the markets. So as a trader, you have to be very cautious. For example, Janet Yellen will change her terminology in terms of interest rate changes. So she will say, for example, as opposed to saying we are going to hike interest rates, she'll use we could possibly be hiking interest rates in the next few months. So that change in terminology, that dovish change, could be seen as, okay, something is happening. So I might have a position more long term. When she starts using words like we are, we will be, or she starts giving times and dates and time frames as to when she will be changing interest rates, then that could be more short term. If she says in the next month there's going to be a hike, then that there's going to be activity in that next month. So really listen out to effectively what's happening to what they're saying, basically, and use that as an indication as to whether or not you want to make it a short term or long term sentiment. The term dovish and hawkish come into play there. Unfortunately, I don't have a slide. I normally have a slide about dovish and hawkishness, but dovish and hawkishness is really concerned with what the what the central bankers say. Sometimes they can be aggressive, which means that something is going to happen, and other times can be a little bit more soft. And when they're softer, then it shows that there's an indication of something that could be happening, but not happening immediately. And going back to the signals, a member of who's not a central banker, a member of the public, who everyone should also listen to. It's this gentleman right here. Last but not at all least, Donald Trump. We all know what the situation is in the current global climate. This gentleman plays an extremely huge part, like what I showed you earlier on. From November last year, we've seen an extreme rise in the Dow Jones, and the growth in the Dow Jones. Um, the man was instated as president at the end of last year. We've just seen a rally from that, and we call it the Trump rally. He's come in. His maverick ways have really depicted the way the economy is going. His relationship with someone like Janet Yellen, his understanding of markets as a whole. People aren't really sure as to whether or not he has a great hold on the markets themselves. So, he's another gentleman that really needs to be listened to, because for better for worse, um, he does affect the markets. When looking back at his relationship with Janet Yellen, a lot of the plans that she's given the US, or a lot of rollbacks on tapering that she's mentioned, is on the basis of what Donald Trump said in his manifesto last year when he was going to be president. And we're actually going into a year of his presidency, or him being elected, and we want to know, what has he actually done to the economy, how the economy has been trading, and will his measures, will his rollbacks on taxes for businesses be put in place? Who knows? He's having a very difficult time to pass things in Congress at the moment, and this is causing to be a problem within the economy. And people are seeing this, or envisaging this as being the next point in time where we might see a crash. Okay, and just going back to a few questions that I have. Just a moment. Do monthly charts suggest to sell by using candlestick pattern? Mr. Bala, I would suggest going back to one of my technical indicator webinars that talk specifically about candlestick patterns. But monthly charts just show each bit of pricing in that month. It's more long term. Again, if without going into too much detail, because this is a fundamental analysis webinar, just have a look at one of our technical indicator webinars, or just email me after, and I can speak to you about that. And for you, Andrew, yes, these webinars are recorded. You can catch them all on our YouTube. They'll be uploaded by next week. And yes, Kenny, if I've got your email and all your details, I will send you a copy of this PowerPoint when I'm done. So going into sort of the final phases, we've spoken about the central bankers, the people that move and shake the markets in terms of fundamentals. Going back into it all, how does GKFX help? So how do we help clients effectively get this information and a better understanding as to what is out there and what you have access to? And we at GKFX endeavor to give clients as much information as possible. So if you are trading with us and you don't already know about these things, it might be worthwhile you having a look at them. And if you aren't trading with us, then you know that when you do open an account, these are the type of things you would have access to. So we have Market Insight, which is powered by market analysts here at GKFX. Some of you may know, some of you may not know. But Market Insight is really good at giving clients information about what is happening on a step-by-step basis. Effectively, we have market analysts that's all they do is literally just write about what's going on, both here, abroad, across the markets. And it's always a good place to go and get information. They're done on pretty much a daily basis on companies. So if you're looking, some of the clients that have asked about fundamentals for specific companies, if you're trading shares, for example, we've got this by Patrick that he done yesterday, which is talking about some of the mergers and acquisitions. This is sometimes information that you won't have at your disposal, and what we try to do here is make this information accessible for every client, whether or not you're effectively whether or not you're a new trader or a beginner or whatever you are, whatever stages of trading you are in, you'll have access to all of this information through Market Insight. You can use this information to literally go through your trades. So again, Patrick Higgins is one of our market analysts. So we have quite a few that effectively go through. If you just look at the bottom here, I've scrolled down. We have James Hughes, who's the chief market analyst, Patrick, Sarah, and Peter Tuchman, who I'll go into a little bit of detail in following a few of my slides. So going back to my slides, we have Twitter. Twitter is one thing that I speak about to a lot of clients when we have seminars, in webinars. You can follow us at GKFX on Twitter. If you don't already have Twitter or know what Twitter is a social media application which to be honest, is probably one of the fastest outlets for news. Um, I'm 25. Some may call me a millennial, but effectively, I find Twitter extremely useful because it will give me news that you probably wouldn't find anywhere else on the spot. So you can either follow us here at GKFX, or you can follow people like Bloomberg, CNBC, Reuters, all of these networks that have news at their disposal. And as soon as they find out news, they post this on their Twitter pages. That means you have news because you can follow them. Once followed, all that information will spill out onto your timeline, and again, you can use that as a indicator or information to trade with. Before I go on to my next few bullet points, I'll answer a few questions. I've heard the dollar can affect oil price. Therefore, is it worth following Janet Yellen's speeches as well as following the usual supply and demand? Well, of course, and that's why going back to some of my slides, I spoke about being holistic. You know, don't tend to focus, although there are certain aspects that will be affected by statements. So, like I said, inventories will specifically affect oil. People like Janet Yellen, who are huge figures within the socio-economic climate, whatever they say often will affect many markets or financial instruments. So having an appreciation, when you're looking at the news that's coming out, to also figure out whether or not there might be a movement on oil. I definitely recommend that use the news if it's out there. Have a look on the charts. See when she's talking, the time she's talking, some of the movements that's occurring when it's happening. Okay, so yeah, going back to you, Benjamin, that's definitely, I would say, definitely follow her speeches as well for oil if you are trading oil. Um, and what is the best strategy to trade news? That's a difficult one. It's more down to yourself as a client when it comes to strategy. Some people like to get in when the news is just about to hit. Some people like to get in, say, for example, a movement has happened and they're catching what we call the retracement. It's really down to what you feel comfortable, what the settings are in your account, how much money you have in your account. Because one thing I will say is that trading on news is definitely, because there can be so much volatility, it can be dangerous. So have a good appreciation as to what the markets are doing, watch the news effectively, and then try to base your decision or your trades on that, on whatever suits your trade style most. Going back to how does GKFX help? We've got daily morning briefings again. We have effectively outlets where the chief market analyst or someone from the support desk will go through information about what's happening in the markets, who are the movers and shakers, what news to expect. It's a little quick insert or quick webinar that just takes up maybe 5-10 minutes of your time, and yeah, it just goes through what we're going to see on today's trading effectively. We have NYSE Einstein every Monday, which is held by Peter Tuchman, who is a very, very likable fella. He's been working on the trade floor in the New York Stock Exchange for some time, and we have direct access to him every Monday. And he does what we call a weekly snapshot, gives us information about what's happening, what's going to happen, and obviously he's working in the melting pot, in the pit, as it were. So some of the information that he does give is extremely crucial. So use him and as and when you can. We have Whiteboard Wednesdays, so we try to split up news as much as possible. So Whiteboard Wednesday, short educational videos as to how you can improve your fundamentals, how you can understand news slightly better. Held by one of the chief market analysts. And again, all of those videos are on our YouTube page, in which you can have a look at in your own time and find, watch in your own leisure. Daily newsletters and weekly calendar, weekly webinar schedules. Again, that gives you information as to when fundamentals is going to be released and when you can effectively use them. Those daily newsletters will be sent out to your emails, and you can use them to your liking. Send it, read it, and then trade off of that. And last and not least, relationship managers. People like myself, every person that has an account with us will be assigned a relationship manager. A lot of us are pretty knowledgeable, and we're happy to share. A lot of people, when they are trading, sometimes feel left alone. And we try to alleviate that. We try to make sure that everyone feels wanted and everyone has information that we have. So what we do is we effectively all the information that I have at my disposal, I share with my clients. Whether it be something from the Squawk box or something from the Bloomberg terminal we have in the office, I'm more than happy to share that information with you if it helps with your trading, or because we can't give advice, we try to help every other way that we can. So just a quick one, going into the end and just answering a few questions. What's the best broker for news trading? Again, that's subjective. You can go back. Certain clients, certain brokers don't like clients trading on news. Others do. It's trial and error in that respect, Mr. Ostad. So definitely have a look at what suits you, have a nose around in the markets. And Andrew, what do you think putting buy and sell stops above and below current price 5 minutes before news release, the probability of success? That's a difficult one. The only thing I can say without giving advice is that it depends on what news is coming out, and if you're running them tight, they might get hit very quickly because the news might be vicious or take a vicious hit on the trade. Um, Again, it's very subjective. It's really down to what the markets are doing, how the markets are moving, what specific news is coming out. Um, Oftentimes I find that clients that really do take the best advantage of news trading are those that follow the news just as it's released. So they'll start putting in their buys and stops just as the news is released, a few moments after the release. So effectively maximize direction, or maximize where they can see the direction of the market going, as opposed to putting it before where they can get stopped out or hit out very early. And Mr. O said, you've asked about slippage. Slippage is something that, again, is subjective to brokers. It's very dependent on who you're trading with. We try our best not to slip clients because we try to give clients the best trading price possible at that time. But it is true, certain brokers will slip their clients, so be careful of that as well. That's my bit of a heads up. When you're trading with a broker, make sure that you don't want to be with a broker that will effectively slip your trades when news is coming out. So just a quick look at what we have in terms of resources. Like I said, if clients want to go back and watch this webinar, we have GKFX UK in YouTube. If you just type that in the search bar, we have quite a few number of subscribers and quite a few number of videos. And here is where you'll find all the content that's relevant to what we have done today. It goes through daily morning briefings. It goes through our interviews with the NYAC Einstein, trading tips and tools, trading boot camp, which is what we're going through now. All of these things, you can effectively go back and watch as and when you're ready. Okay, a lot of information's here. Watch it at your own time, at your own leisure. Watch it in parts. Watch it in however you want it. So here's where you can find most of the information, barring what we've given out in terms of slides, but in terms of visual outputs, some of the technical indicators or technical webinars that I've gone through are all held within this area here. All right, so just finishing up. All my details are on screen, guys. I do know that the webinar has gone on slightly longer than we ever expected, but it's been good. And effectively, what we do is, if there's any questions or any queries that you have, you can get me directly on all the details that you see on screen. I'll leave those there so that clients can use that to the best of their advantage. Like I said, if you have any questions, let us know. We're always here to help. As a little sort of summarization, fundamentals is important as much as technicals. And if you want to, effectively maximize your trading, you have to have an appreciation of what news is going on in the market. So please, whether it not be through ourselves, whether it be through investing.com or any sort of news outlet that you have, it be TV, just pay a little ear or a little bit of attention to it all. So yeah, thank you guys for joining. Like I said, all my details are on the screen if you have any questions, and what I'll do is I'll start answering a few questions that I've seen in the question box. So, hi Toby, do you charge withdrawals on your platform? No, we don't charge any withdrawals on platform. We don't charge any deposits. It's all down to your bank. If there are any charges, then it's between yourself and your bank, and that's for Gideon. No worries, John. It's been a pleasure giving it to you, and thank you for joining. And do we need login details to get onto our website? So no. If it depends on what section of the website that you want to go on to. When it comes to logging in, we have my GKFX, which is the secure client login area. So if you are a client of ours and you already have an account with us, you would have to log into the my GKFX page, and this is where you can get your deposits and withdrawals going. And this is how this section looks. Okay. But then we then have aspects that you can access without having to log in. So that's just going onto the GKFX website itself. And all of this information here, you'll have access to, including market insight. All right. So you don't need login details to get access to all of this information here. Like I said, if you have any questions, just let us know. Stella, I do know that you said that you wanted some of the slides, so just give me your email and then I'll send you that slide to your email. But for everyone else, again, thank you for joining. It's been a pleasure. And again, yeah, we hope to see you in our next installment of our webinars. Cheers and goodbye.